Good morning, everybody. Welcome to the first 1 million by 1 million public strategy roundtable for 2017. It's a great pleasure to have you here. Thank you for making time. 1 million by 1 million, as you know, is the first global virtual accelerator in the world. We run it out of Silicon Valley, but with a global footprint. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue, build $1 trillion in global GDP, and 10 million jobs. This is the 334th free mentoring roundtable. These have been going on since 2008. The fall of 2008 is when we started tinkering with this format of online mentoring, and I can say this has been a phenomenal experience to be able to work with entrepreneurs in all different parts of the world and both learn from their experiences and be able to share with them our experiences to help them along in their journey. It's been fascinating. The event is being recorded. You will have the recording available on our blog as well as on our YouTube channel. If you're live tweeting today, please use hashtag 1M1M. Our Twitter handles are at 1M by 1M and at Romana. We push a lot of very rich content through these channels, so please follow one or the other handle and you will have access to it. 1M1M Roundtables is our YouTube channel. That's where recordings of all prior sessions are available. A great body of learning material. Please feel free to check those out. And you will see a lot more interesting video content on that YouTube channel as well in 2017. These are the call-in instructions. We're not quite ready yet for call-in, but I will put this slide back up. Please do line up your questions. This is a roundtable. We want you to participate as much as possible, so by all means, plan on calling in. We're going to start today with a conversation with Lalani, founder and chief strategist of Social Annex. Al, welcome. It's great to have you.
Thank you. Thank you for the invite. I'm excited about it.
All right. So tell us about Social Annex. What do you do? What is the business?
Okay, yeah. So Social Annex is a SaaS-based software platform for building customer loyalty and advocacy. And we're focusing on the retailer and manufacturer market as a starting point. So we've essentially built software for B2C companies to help make their customers loyal, which is kind of make them buy more often and buy bigger, then take their most loyal customers and help make them into advocates, advocates that can talk about them and drive further revenue. So that's what we do as a SaaS platform.
So let's experience your entrepreneurial journey a bit vicariously. You bootstrapped this company to about 1,000 customers. How did you do it? This is very much a part of our philosophy, is to be as creative and as resourceful as possible in various bootstrapping techniques. So what is yours? What can we learn from you?
Yeah, absolutely. There's a lot to be learned, and we did raise some money, but it was very, very small compared to many other companies in this space, which we'll talk about in the next few minutes. But the idea of bootstrapping, just kind of backtracking a little bit, I started my career, I would say, in startups. This was my second job back in 2000 in a company right before the boom, where I started off as an engineer, ended up doing many different things. The company was about 25 people and grew to 400 and back to about 40 or 50 when I left during the course of 5-6 years. But, this was right before the bust, and we raised about a Series B round of about $40 million and a total of over $50 million. And I learned a lot about the challenges there are when there is not a great product market fit and you raise a ton of money and you make a lot of decisions to scale. So a lot of it from that was from my learnings back in the day that I just wanted to build the company that would scale the startup way, so grow still as fast, but not using that much capital, so build it capital efficient from the very get-go. There's a lot of stories of how I tested the market and how we got there, and we can go into that, deep as you like. But the idea always was, let's make sure there's a real clear market and someone's ready to pay for the product, and that product will pay for, and that cost will pay for our growth. That's always been sort of the idea from the very get-go.
So I guess the most interesting, clearly you had, by the way, this experience that you described of working for a company that raised a lot of money and then imploded, this is an experience that you described this experience from, the early part of the 2000 decade, 2000, 2001 timeframe. But, all through the last, 15, even 20 years, I would say, this story has been replaying over and over and over again all over the venture capital and startup ecosystem. So we constantly hear these stories, and there will constantly be these stories. If you're following our blog, we are doing a new series called Death by Overfunding, and we just covered the story of a company called Nasty Gal, which did $23 million in revenues before raising any money, and then raised too much money and just basically went bankrupt recently. So the negative experience that basically gave you your philosophy of company building, of making it capital efficient to get to product market fit. This is something we're trying to, it's a lesson we're trying to impart to our community repeatedly, constantly, and emphatically, because, it's a very expensive process for you to make this mistake as an entrepreneur to, burn through 5, 6 years of your life learning this actually by doing it is not efficient. So it's great, Al, that you're telling this story to our audience so that they can hear it from another person and another person's experience and how you've done things differently in as you started Social Annex, how you did things differently. So I'd like to double-click down on the point of how you managed to get 1,000 customers and really deeply get to product market fit.
Yeah, absolutely. So I'll backtrack just a little bit from the initial process of when we started the company in the first place, and that'll give you an idea of our idea of getting the product market fit. From a product market fit perspective, the way I look at it, and this is not technically my first company, so technically my third try at a company. This is my first one that's gone this far. Let's just put it this way, right? So my first company, I'm an engineer by background, by the way. So I like building things. And so my first, even though I had worked for a startup, right, and I'd seen a lot of money being spent, when I started that first company, my intuition was just build software. Let's build something. And the traditional way of, build something, people will come. And my background after that startup was, again, a B2B startup, which is what we are now. After that, I worked for a company called Teleflora, which is an e-commerce company. And so I learned a lot of things around e-commerce, and at the time it was exploding between the 2005-2010 timeframe. So my first foray in the startup was building an e-commerce company. And I built this, I feel like a truly best-in-class e-commerce site. And I felt like I bought products that I felt people would buy, but I had no marketing plan. I had no real sales plan. I didn't have the marketing budget worked out. So that first foray was very interesting because it was like, I can always build stuff. That's kind of my background, has always been. But that first foray taught me that, you have to really make sure there's a market, there's a marketing plan, that you can actually scale it before anyone buys. So my second startup after that was, I started this software piece, and I come from India originally. So when I first came here, this is an interesting, all of my stuff has been from past experiences, by the way. So all these three things have just come from things that I had problems with. So the first one was e-commerce. I wanted to build that. The second one was I come from India. India, and I wanted to build a place for immigrants to be able to assimilate into this country very quickly. When I came in, I was able to assimilate very quickly, and again, I was able to learn the accent, I was able to learn how to talk, how to speak, I was able to learn sort of the lingo and everything else, and I wanted to kind of productize that. That was my second foray into startups. This time around, I didn't build anything. I went out and talked to probably 1,000 people, immigrants that would potentially buy something from me. And interestingly, most people said they didn't care. They're fine with how they are. They would like to stay that way. It really wasn't a problem, at least so far that I found after talking to 1,000 people.
Good thing that you actually went and talked to people and invalidated in your idea. This is something we also very aggressively push in the methodology, is that don't build anything without immersing yourself in your prospects' lives and problems.
Yeah, absolutely. And then the first startup, I spent 9 to 12 months building an amazing e-commerce site, and I think I sold probably, 100 orders, which is dismal, right? I mean, I managed a $100 million e-commerce business. This is like I barely made $10,000. So that's nothing, right, in the first one. So I realized I spent a year making $10,000. That can't happen again. So this time around, before building something, I'm going to find out if some people want this in the first place. So I realized the second time was this. So I really didn't build it, but it was like a 3-month failure. The reason I say it was still a startup is because I incorporated the company. I still have the company name. Our company in India is still using that name from that perspective. So it's still kind of a memory of a failure. Or I wouldn't say failure, but it was essentially a good learning experience for me. And that was the second one. So the third time around, which is Social Annex, we started exactly the same way. We said, we're going to go out and validate this market. So now our first foray was building, again, my background in e-commerce. I wanted to build, after this second piece, I had hired a couple of developers. I was building some stuff, and a friend of mine came to me and said, hey, my large development company just quit, and I'm in trouble. I need to build this site on Drupal, and can you build this for me? And I wasn't making any money at the time, and I was like, hey, listen, let's try something. And so I had a couple of developers. I have a development background, so we said, okay, I'll help you out. We'll build you the site. And this was like a large company, and it was like $50,000 to $75,000, to build a site in a month. It was good money to kind of get some piece there, and so that for about 6 to 12 months became a web development business. Which turned into Social Annex, by the way. I never wanted to build a web development business. I'm not a services type of person, but I don't like services per se. I'm always kind of product and software. So, but that was very, very profitable, actually. In fact, way more money than I've actually made in my job before that, working. And so very profitable, but out of that came the idea, because we started working with some e-commerce companies, came the idea of Social Annex, where at the time social was growing and people needed a way to use social to make advocates. People go out and talk on social. We wanted to nurture those advocates, and that's where this idea of Social Annex came about. But, even though I had this idea and I talked to a couple of our existing web development business customers that they would buy this, I didn't want to build any of that this time around again before I validated the market. So I had bought a booth at the largest e-commerce conference there is, which is called IRCE in Chicago every year. About 500 to 600 different vendors have their booths at that conference, and a lot of retailers, about 7 to 10,000 e-commerce retailers come to that show. And so I said, I'm going to go pitch. So I just got some screenshots. This is no fake, by the way, real screenshots, no software at all. And literally the booth, if you looked at it, you would probably laugh at it because it was a tarp behind the booth. We actually didn't even have a booth behind it. It was like a tarp we made in the last 3 days and somehow put it behind. I hired 2 people off of Craigslist. Now, this is really funny, but, I literally lugged all the luggage and I built this tarp behind, and I hired 2 people off of Craigslist, and I said, stand with me and you can pitch this idea. If you can pitch this idea, and the idea was very simple, tell people about, if you're on an e-commerce site, you can share on Facebook and Twitter and all of this, and tell your friends, and if your friends come back and buy and get referred, then you will get a reward. So it was an affiliate-type program, but made social on an e-commerce site. That was the first mini product that we had within our platform. And so I said, let's pitch this idea. Let's see if anyone is interested in this. So we pitched it to probably 300 people at the show, randomly. And if you saw, and this is how we do shows even now, is we're very aggressive. We just go out and talk to people. Just say hi, how's your day going? And hey, listen, I want to talk about this thing. I don't want to sell you anything. I just want to tell you, is this something that's interesting? And if we had this, would you buy this?
Right.
And out of that show came probably four really interested prospects, one of which said, yes, we'll buy this and we'll pay you $7,000 for this. Actually, they said, you know, what do you charge for this? And I said, I had no clue, right? It was my first time. So I said, you pay me a referral commission or affiliate commission on every sale. And so he said, okay, that sounds great because then I don't have to invest anything. What will you charge to build this? I'm like, oh, great, you're willing to pay me for building this. That's awesome. Okay, well, pay me $7,500. And this was a large company. I don't want to name them from that perspective. This was a large multinational company and an e-commerce manager from that company. So that's how we started. You know, someone paid us before we even built the one line of code on this software.
So well, how does that number of customers snowball to 1,000 then?
Yeah, I mean, you know, it's been over time essentially that we've built this customer base. And that's this story is probably, I like saying the story, but it's about 5 years old or 4.5 years old now. So over the course of time, we've essentially acquired customers, and we've actually, you know,
And what's the customer acquisition strategy? What strategy worked for you?
Yeah, so there was a different strategy in the first phase, and there was a different strategy in the second phase. The first phase was pure hustle, calling a bunch of customers and pitching the idea. The second phase of the strategy, we built an inbound marketing engine. So we said, okay, we're going to build a lot of content, and content marketing was great. We still do a lot of content marketing, so that kind of led to that. And then what's really helped us scale is really pure outbound sales strategy. So, you know, I'm a huge fan, by the way, of SaaStr and Jason Lemkin. And you know, even though we haven't raised a ton of money, I do follow a great, you know, SaaS VCs. Thomas Tungus is a great, you know, one. David Skok, which is, you know, who talks about product market fit. That's another great one. So anyways, back to this idea, if you look at SaaStr, I mean, we built the B2B startup the traditional way. It's outbound process and sales. We've got a SDR team, which is, you know, calling outbound, reaching out to people. We've got a, you know, data team that's looking and helping and build data using content and using other techniques that the outbound team uses. And then it goes to our sales team that actually pitches and helps close the sale.
And what's the price point you're selling at now?
By the way, just to clarify, right, so all customers, the initial customers, we've still got a ton of customers that actually paid us on a affiliate model, but the last, you know, few hundred customers are essentially a SaaS-based product, which is what we sell today. We don't sell all the affiliate-based piece now. So our current SaaS pricing is, you know, on average, it can range from anywhere from $20,000 US for one of our products to $100,000 US for one of our products. We have several enterprise customers that pay us more than $100,000 a year, but an average kind of, that's our sweet spot usually.
Okay. So your funding history is about a $375,000 angel financing and then a small venture round of about $3 million. Is that correct? Am I reporting this correct?
It's actually a total of $3 million, including that angel piece. So
including
we
the
haven't.
Angel round, okay. So it's a total of $3 million, including angel. And you talked to us a bit about your competition. Some of them raised 30 to 40 million in funding. What happened to them?
Yeah, so you know, one of the things that helped us, I feel like, just in this the core focus on the revenue and sales and growth. You know, what's helped us essentially is build it the right way. So we've kind of used revenue to fund growth. You know, the space, it's a fairly hot space, and a lot of companies, and just to kind of backtrack a little bit to kind of explain this a little better. So that first idea that I mentioned to you was one of the many pieces of the platform that we built. You know, I never thought that one idea could scale, and I think just, you know, coming from a background of actually using these softwares on the other side, actually being a buyer of this for 6 years when I was running e-commerce business, and then building it before that, I realized that, you know, when you build software on a platform, especially social platforms, these things change very quickly. So, and you probably hear this a lot of times, when you have a base that's not completely controlled by you, you have to build software that doesn't just have one leg. So if you just build a referral engine, or you just build a sharing tool, or you just build something else, that's great, but times may change and things might not, that work amazing today may not work tomorrow. So what we did was essentially we built a platform. We built a platform of about, now we call 6 different suites, which have, you know, about over 10 different products that are core to the platform with different ideas. So we've got a product called Visual Commerce that allows you to grab images from Instagram and different visual social networks and curate them and associate products and put them on your site. That if you go to bedbathandbeyond.com on the homepage, you will see that, you know, in play. And we've got several such modules. One of our stronger ones on the customer loyalty side is we actually power loyalty programs for several retailers online and in store. So you walk into a store, you get points. You go online, you get points. You can redeem that to get more rewards, that type of stuff. So we've got different modules on the loyalty and advocacy side. Most of our competitors, back to that question now with context, build one piece of the pie, as we call it. And so what I saw consistently in the market is people built that one piece, it got hot, and they essentially raised a ton of money and put a whole sales and marketing engine behind it. And when you don't have your unit economics worked out, your customer acquisition cost, your retention ratio, your your ability on the CAC versus your ability to kind of actually monetize that customer, when you break even on that customer, when you don't have those unit economics worked out and you raise a ton of money, you start burning money and you realize the customer is either not breaking even faster, you're losing money, you're burning through a lot of capital, it's not capital efficient, you're going after a market that doesn't exist and may not be as big. So what we saw in our marketplace when they built these different pieces, that each of those fell into these sort of traps. We've seen when we started, and this is kind of still fairly short time, we've seen people come in, raise, you know, $10 to $20 million. There's some that have raised $30 to $40 million, and they've flamed out. There's interestingly a company that's raised $30, $40 million that's doing less ARR than we are. So, it's an interesting play when you don't have your unit economics worked out and you try to scale, software companies.
This is also another mantra that we harp on continuously is not to raise money too soon, without exactly what you're saying, without working out unit economics and figuring out what would you do with the money. Doing experiments on venture capitalist dollars is a very expensive process, and it may not turn out right? So our philosophy is that you should only raise money if you know exactly how you're going to spend that money. If you're still trying to figure out what is your customer acquisition strategy, what are your unit economics, and what are you going to do if you, let's say, put in $1 million or even $10 million? How are you going to generate 3x, 4x, 5x, 10x the amount in revenues? And if you don't have that part of it worked out, raising money is a dangerous thing. Because you don't get to high velocity growth, and VCs want you to grow at a very, very fast pace. That's what you're saying, Al, and it's great that you are emphasizing that point, over and over again, that I would like all of you who are listening to really internalize this point absolutely and completely. So, the question that we often get from our community all over the world is, how can I compete with these heavily, heavily funded competitors? And the answer, and as you are describing with your story and your experience in the market, Al, is that a lot of these heavily funded competitors are going to flame out because they're not focused on fundamentals. They haven't got their fundamentals right. And if you can stay focused on fundamentals and keep executing in a capital efficient manner, the chance is that you are going to win in the market. And that's your story of Social Annex is a great evidence of exactly that, that storyline. So one last question, Al. Now that you do have very good validation, you have product market fit, you have an understanding of your unit economics, you have still chosen not to raise significant amounts of money. What is the rationale and the thought process behind that decision and that choice?
Yeah, I think that's a great question, and you know, it's a question I ask myself every single year and say, is this the right year, or is this ever going to happen from that perspective? So, you know, there's different points in the cycle when you feel like you may want to raise. Initially, if you want to get started, you need some capital. When you see some ounce of product market fit, you need a little bit more capital, and then you start scaling, you need significantly more capital. From our perspective, I wish I could say everything was all thought through and, this is all about kind of personally figuring this out and writing this up. This is also, frankly, it is my first time at this scale as well. So I'm driving a lot of this based on, obviously, things that I've learned over time. And so, I'll tell you, the company that I work for and, the founder that brought me here to the U.S. when I first moved here, brilliant guy, really, really smart guy, but he didn't personally do really well because of where they were, they'd raised $50 million, so it was boom or bust. There was nothing in between, and he ended up on the other side. And he's an amazingly smart guy that I draw inspiration from even now. So, a lot of it is just based on inference, right? We were scaling well. Now, one of the challenges if you don't raise money, I'll tell you, there's a flip side to it as well, is if you start scaling, it takes longer, in fact, significantly longer to scale if you don't have a large amount of capital. So, you have to make certain decisions that are short-term ROI decisions. You may not be able to invest in something where the ROI might be a year, 2 years down the road, where you're investing in more of a brand, where you're investing in more of a outcome that might be a little bit down the road and that sort of it. So there's some flip side to growth. It actually does stunt growth. You have to be very ROI focused in your growth techniques. So it does have those challenges, by the way, which people should consider. But from my perspective, the pain of spending 5 to 7, 8 years, which is what it takes for a SaaS startup really to get to a real scale, and doing that time and ending up with zero, which is what I saw really happen with that person, who I feel is extremely smart. I just didn't want to go through that pain again. And so even though, time might be right, we're still growing over 100% year over year, and, wasn't worth it, from my perspective at least, based on what I saw.
Well, and also I think if you do the math, let's say right now you have to provide your investors with a good solid return on a $3 million capital raise. So to make everybody happy and get good return, investor return on their investment, it's not that difficult. You've already crossed $5 million in revenue. If you want to provide more color on that, you're welcome to. But so the valuation of the company is already at a point, if you were to get acquired, people would acquire you for a sum of money that would give everybody good return on investment, including make you a fair amount of money. Now, if you add in another $10 million into the funding pool or another $20 million, $30 million into the funding pool, which you probably can attract that capital today, the threshold at which you can make investors happy is much, much higher. And smaller acquisitions happen much more frequently than very large acquisitions. So it's just a probability game. And what I'm hearing is that you just don't want to go through this experience of spending another, 3 years of building this on top of what you've already put in and end up with nothing, which is what's happening a lot. By the way, this year, 2017, you will hear tremendous stories of flameouts, and we will be covering them. There's a couple on our website. If you go there on the tech talk, you'll find a couple of great stories exactly of this kind of flameouts of raising too much money and not being able to deliver. So I have to say, I think my instincts are more with what you are doing and how you're doing what you're doing. So I can relate with what you're saying, what your dilemma is, and the side of that decision you are landing in is the decision that I would advise other entrepreneurs in our community to make a similar decision.
Sounds great. No, absolutely. Okay. And I think it's painful, but I think when you get there, it's always a good outcome. So.
Yeah. Do you want to add anything before I know you have to take off?
No, I think that's about it. Thank you for inviting me, and wish you the very best. This is awesome.
Thank you. Thanks for coming.
Okay.
All right, folks. We're going to get into the pitch session and talking about your startups. Let me set a bit of expectations before we jump into this segment of the program. This is a working session, okay? We are completely on your side. We have no other agenda but to help you with your strategy, your decision-making in this entrepreneurial journey that you're going through. So remember that we are on your side. And, this is business advice is subjective. We give you advice based on our experience and our philosophies. Al just talked about his experience and the philosophy that he has developed in terms of business building through his experiences, which are kind of in tune with our philosophy. But there's a whole, other sets of schools of thoughts that believe in raising huge amounts of money and so on and so forth up front. So our philosophy is what we are going to give you advice on, and our philosophy is that not all businesses can raise money, not all businesses should raise money, and raising money doesn't guarantee success. So you really have to, be a lot more sophisticated in your funding strategy than just kind of following your nose and trying to get your hands on funding. That is not success. Entrepreneurship success does not equal financing. Entrepreneurship success equals customers, revenues, and profits. And those are the fundamentals that we want you to stay focused on. So that is the philosophy, that is the ethos of this program, that is the perspective from which you will get advice here. You can take it or leave it, that's up to you. And the last thing I would say is that please do participate. This is a roundtable. Use the public chat extensively. Set your chat to send to all participants and ask as much questions as you want, dialogue and so forth. And I will also open up the phone line after we're done with the entrepreneur presentations, and you can call in to dialogue as well. We're going to start with Amir-san Roberto from Shanghai, China. What happened? Where is Amir-san? Are you on the call? I just saw him. He was on the call, and then maybe he dropped off or something. Okay. I am going to move to Sumit then. Sumee Chauhan, calling from India.
Hello, ma'am.
Sumit? Yes, go ahead, please.
Ma'am, actually, I just want to brief you about what we are doing. Actually, we are into manufacturing of mobile cases and covers.
Yeah.
And my company name is, right now I'm having this proprietorship firm. My name is Fashion House. I have just now registered one private limited company as well, Hachi Global Private Limited. And just to brief you about when we get registered. Hello?
Yes, go ahead. Keep going.
Ma'am, actually we were registered on 7th July 2015. This is our registration number. We do have our own import-export code, because the raw material which we use, we import directly from China.
Okay.
And these are our official distributors. Next slide, please. Ma'am, Hachi is our trademark, applied trademark. We applied on 3rd Feb 2016, recently only. And actually at Hachi we are into manufacturing of printed mobile cases and covers. Why we are into this business is like every year, especially in India alone, there are like more than 70 crores of smartphones have been sold so far from 2010 to 2015. So there's like a huge scope in this field. Like everyone is having smartphone now, and in India especially, what I have seen that the craze for this one smart cases and covers is at very high. So like we started our own manufacturing in 2015, and right now what we are having very good designers. So next slide, please. Hachi journey as of now, ma'am, like we started our business in 2015. We started with near 50 products on this various marketplace, and right now we are having 84,000 products live on Amazon, Flipkart, Snapdeal, and this one Paytm in Indian marketplace.
Are you selling?
Yeah, ma'am, we are selling. Like we are selling through e-commerce.
Yeah. So how much are you selling? What is your revenue level right now?
Revenue level as such, we are a startup, so like the turnover was you can understand in lakhs, na? Like our last
yes.
This one like 60 lakhs was our revenue last year.
Okay, so 2016 you sold 60 lakhs of smartphone cases.
No, not the cases. 60 lakhs was our revenue actually. What we get by sold like selling.
Yeah, understood. But 60 lakhs revenue means you've sold 60 lakhs worth of smartphone cases, yes? Your product is smartphone cases, right?
Yeah, smartphone cases only. Till today, we have sold more than 10,000 smartphone cases in this one last 4 months only. Ma'am, actually our brand Hachi.
The smartphone case, you sell smartphone cases. That is your business.
Yes, we manufacture them and then we sell them because we are into printed mobile cases and covers.
Yeah, fine. I got it. I'm just trying to understand your business. So you have sold 60 lakhs worth of this product in 2016. Now, how do you acquire these customers? Where are you selling, and where is the product selling the most? Is it on Amazon? Is it on Amazon Marketplace? Or where are you getting the maximum revenue from?
Ma'am, right now we are selling in different marketplaces. Like we are getting our maximum revenue from Snapdeal and Flipkart. We are also selling on Amazon, but the main contribution comes from Snapdeal and Flipkart. And we are also trying to make our own e-commerce platform, and so we are working on that. And next slide, please, ma'am. I want to brief you about our achievements, ma'am. Our clients, we have recently collaborated with MTV, VH1, and MTV. This one Roadies, so which is very popular in Indian youth. Roadies, everyone knows Roadies. Even in Facebook page only, they are having 84 lakhs followers from India only. Okay. So we are now the official distributor and official manufacturer of the cases for MTV, Roadies, and VH1. And why we collaborated with them when we were approached is that as a startup we were knowing that to reach because these three companies, these three brands, MTV, VH1, and Roadies, altogether having 2.26 crores of followers in India only. Yeah. So for a startup, if we want to promote our product and if we want to get visibility of 2.26 crore Indian youth, like it was very spending. We could have spent like in crores to reach to this amount of audience. So by collaborating with them.
What is the deal that you did with MTV India to be able to reach this audience? What have you done? What is the deal? Did you do private label products for them or?
No, actually, the product which we are we are launching, they are having our brand name as well. They are like MTV. We are launching MTV Gone Case by Hachi. The product will be visible like this: the MTV Gone Case by Hachi. With VH1, we are having like VH1 Cool Case by Hachi. And Roadies is like a youth-oriented brand, so it will be like Roadies Hard Case by Hachi. So we are like putting our brand with these brands, and we are having 3-year contract with them. And why we because at startup right now the quality, the manufacturing facility which we are having are suitable for Indian, because in India we sell the product at a range of 499 to 599 price point. But we want to expand our we want to like improve our manufacturing facility, as well as we want to reach the global audience, because these brands which we are having for the next 3 years are basically these are American brands like MTV and VH1. They are having 2.26 crore followers in India, but they are having more than 10 crore followers all over the world. So
what is Sumit, what is the deal? What is the commercial deal with MTV and VH1 and Roadies?
They will promote our product on their various platforms, like social media platforms, and we have signed a 3-year exclusive license contract with them, and we have paid them a MG that we are going to pay them over a 3-year period. So
you're going to pay them. Like you're going to pay them to promote you. This is not a royalty sharing deal.
This is a royalty sharing deal, ma'am. But but apart from this one, that there is a minimum guarantee which we need to pay, and that is a very less which we can easily do. So we signed that deal.
What is the minimum royalty? What is the minimum payment?
Ma'am, actually, we are not allowed to disclose this. So minimum guarantee is na. So as per our agreement, we are not allowed to tell this one. About the MG, we can tell about that we have signed, we are having these for the next 3 years, we are having.
So these deals have not started kicking in yet. You've signed these deals, but you have not started.
No, ma'am. Actually, yes, ma'am. We signed the deal 2 months back, but because we are a startup, because before launching, we want to increase our, we are having a very good manufacturing facility, but we want to. Launch this with we want to first fulfill all the raw material requirements, because all our raw material comes from China, and China is in the month of Jan, the China stops manufacturing. So we just procure all the raw material from China this month only, and on 15th Jan we are launching this one.
I see. Okay. So and, what are your questions for here? For this program,
ma'am, actually, we want to know that what we see that this is the chart, the size of market, size of this one, mobile phone sold. In 2015, you can see that 140 million smartphones sold across the world, and why we are into smartphone cases, ma'am, and why we are with brands, because without brand also we were doing very good. But the thing is, we see a huge brand gap in this segment, because when as an Indian, when Google or when we open any marketplace and search for mobile cases and covers, we do not find any brand to which we can relate ourselves. What we see is that there are 2,500 sellers, and but there is no brand presence, no established brand is present in the segment. So the thing is, before ordering, if you order from any seller, the customer is not satisfied before, customer is feeling where to go, because the brand presence is very less in this segment. I can say zero. No reputed brand is selling under this segment. 499 to 599. There are some competitors our main competitor in India is dailyobject.com, which they have raised 9 crores of funding from Unilever venture capitalist, Redbus co-founder and Lenskart CEO. But the thing is, they are selling for what they are manufacturing. They are manufacturing for high-end products. Their average selling price is $799. Their normal selling price, minimum selling price is $799. But the 90% of Indians are buying a smartphone in a range of 8,000 to 20,000. So they are ready to spend $499, but they will not spend $1,299. So they will spend, but that is altogether different market. We want to capture the 90% of the market where there is no brand is present, and to that market we want to capture. And so we decided that if we go by Hachi, we may take more time, and to establish a brand, we must collaborate because with the brands, from where we can get the visibility, and also we can get the sales. So that's why we started. That's why we there's a demand, a huge demand for mobile cases and covers, especially in the segment of 499, 399 price range, and this one. We are the manufacturer.
Can you explain to me what you are anticipating in terms of revenues from your MTV, VH1, and MTV Roadies deals, and in what time frame? So in 2017, what do you think your revenue will be once these deals kick in gear and get executed?
Ma'am, right now, this one, as for expectation, as for our minimum expectation, our revenue will be 4 CR. 4 crore we can easily achieve. 4
crores this year. Okay, good. So what is your question? I like what you're doing, Sumit, and I like the way you're doing it. I like the fact that it's very revenue focused. You're already selling. You have got deals which will help you sell more. So you're going from 60 lakhs in 2016 to 4 crores in 2017, based on the kinds of deals you're saying you've done, I think is a very doable process. So where do you think you have bottlenecks, or where can we help you?
Ma'am, because the thing is, we have spent, whatever we are having, we have already spent on our this one venture, our startup. To compete in the market, what we have done, we even get our own import-export code, because we do not want to depend on local factors. Because sometimes what problem we were facing, we were not getting the raw material in India, because all the raw material is right now imported from either from Korea or from China. So we are 101% totally dependent on self-dependent, I can say. But the thing is, we want with these deals, we want to get maximum out of these deals. We want to capture American market, we want to capture Canadian market. But for that, we need funding, because we want to improve our manufacturing facility as well. So why I participated in this? That first I want to know that what I'm doing, what I'm having in my mind. To go for this one, because the deal is for 3 years and I want to get maximum out of this. And the thing is, right now we are doing 211 models. I want to cover all the 450 models. And basically we want funding, but not that much funding. We want funding so that we can first, because right now we are importing from China. We want to import from UK, because sublimation technology which we are using is basically a UK product. Mainly, but the UK products which are getting sold at a price range of 1299 or 1599. For that we need altogether different manufacturing setup and all. So we want to capture the market.
It's also going to be a very different cost structure if you import from the UK. Products from the UK are much more expensive.
But the quality of the product which we are selling in India at a prices of 499. We may not be able to sell that quality, because that quality is very good, very fine for Indian market. But what I have seen, what I have gone through, why our competitors are doing business, they when we see they are doing business in 22 countries right now. So what we try to find out, that if we want to go abroad, if we want to capture VH1 and TV audience of America, because they are more famous in USA and the Canadian market. So if you want to capture the youth, if you want to approach these two markets, we must improve our production capacity and the quality as well. So
it's not clear to me that is necessarily the right strategy. As you said, there are 2,000, 2,500, or probably more on a global scale brands who are selling smartphone covers, right?
There's no established brand, ma'am.
Doesn't matter. Not all businesses have established brands. Some businesses are just fragmented, and there are a lot of small companies who are selling it. So building a global brand is a very expensive proposition, and it's not clear to me that investors have appetite for that.
Ma'am, actually, with the thing is, mainly our main target is India right now. Our India, and
I would say you should keep doing what you're doing, which is a reasonably good execution so far, figure out how you manufacture given your constraints at the 400 some price point that you're selling at, that you believe is 90% of the market, and capture as much of that market as possible, and get to a much bigger scale so that you have credibility on execution.
Yeah.
Sumit, can you please let me finish?
Yeah, sure, sorry.
Doing a brand in India and doing a global brand are not the same strategies. If you want to do a brand that is a global brand, the amount of money required on branding expenses is gigantic. I don't believe there is a single Indian VC who's going to fund you to do this. So your assessment that you don't need a lot of money, you need a little bit of money, is completely wrong. So my guidance would be to focus on, again, fundamentals, focus on sales, focus on deals through which you can sell, focus on, just like you've done this MTV deal, which a VH1 deal, if these deals are producing well, do more deals like this. And it doesn't only have to be consumer electronic companies or TV channels. There are all kinds of players in the Indian market with whom you can do these joint deals and get to significant revenue. If you can do 4 crores in 2017, if you can do 10 crores in 2018, maybe 20 crores in 19, then you show velocity. And then getting some growth capital for that is not that difficult. But what is the strategy that you're following will determine whether you're going to get funding or not. If you go and tell people that, we're going to build a global brand for cell phone covers, this is not a credible story. There are too many other companies out there who do this, and to go above the noise and build a real brand, it's a gigantic advertising and brand advertising expenditure, which it's not clear to me that any investor would be interested in doing that. That's just throwing money on advertising that has no unfair advantage. You're trying to make a brand out of a commodity category, and I don't think any investor would be interested in investing in that. However, if you're organically building your company, your Hachi brand, your co-branded deals, and so forth, and you have solid revenue growth, you're doubling revenue or tripling revenue year over year, getting growth financing will not be that difficult. And especially because of the kind of business you're doing, there's going to be all kinds of options in doing growth financing, because you could do inventory financing, you could do all sorts of things, bank financings based on the way you're growing. But if you go and tell an investor, a venture capitalist, that you're going to build a brand in a category where there are 2,500 other players, I don't think there's a chance of that getting funded.
Okay, and thank you for your guidance. Actually, what I was trying to say that we are not going to, we are only selling at Amazon.com and this one Amazon.ca because that is a very less that we do not to spend crores of rupees or lakhs of rupees. We just need to highlight our product, because when customer Google, when customer open the website and see that they want to buy mobile cases and covers, what they see in the brand section is there is no brand. So that will give us competitive advantage. That's why I said, because we are not going to put any banners in those countries or in those areas or even in India.
Right, in Amazon.com, building a brand is a different strategy, right? You need to get good reviews from the people who are buying your product, and as you build up thousands of reviews, that's how your brand gets built in an Amazon marketplace or an Etsy marketplace. That's a very different brand building strategy.
Yeah. Ma'am, and the main thing and the other thing, sorry, which like I was hoping to get some information, like for this business now we are into starting phase, and right now we are having some this one, we want to improve our manufacturing capacity, and for that we need some funding, because we don't want a very large funding. What I said earlier, we want as for the Indian market, because the demand is very high. Like at present we are making 2,000 cases a day. We can make 2,000 cases a day, but we are making at present 450 to 500. So we are having a manufacturing capacity, but the inventory, because after the launch and the pre-launch, what we can
expect. What are you financing? Are you financing real estate, or are you financing raw materials? What is it that you're trying to finance?
Raw material, ma'am. Raw material, and this one some machines, so that
for that you need to develop a banking relationship so that you can get bank financing for this. This is not the kind of thing that gets financed on equity.
Okay.
Or you can do it as a friends and family financing. This kind of financing is done in India routinely with friends and family.
Actually, the friends family part is already over. So, but thank
already
you.
Over. So then, banking, you're going to need to do it with bank financing.
Okay. Thank you, ma'am.
You're welcome. Okay, Jimmy is next, huh? Let me go to Jimmy.
Hi, Sumana, can you hear me?
Yes, I can hear you. Go ahead, Jimmy.
Yeah, hi, good morning.
Good morning.
Basically, just excuse me.
Go ahead, Jimmy, with your presentation.
All right. So basically, we are based in Gujarat, India, and we've just registered an office in Delaware as well. I'm the founder and CEO. We have about 3 years experience in developing solutions for communication. That could be chat, audio, video apps, and we've delivered to a lot of carriers and even satellite companies in the past 3 years.
Okay.
A little bit background myself is I'm a graduate of VJTI Mumbai, and I worked for GE for about 5 years. I was in the leadership track. I stepped out and started my service company, which we have grown well over the last 5 years. And zoro.im is something that we have started in 2016. So basically what we want to do is we want to revolutionize the business, acquire, engage, communicate, and support the customers, and also solving the problem of customer support. That could be from SMEs to big corporates. How we're going to do it, we want to empower by powering them with business messaging, and by powering the business with bot-assisted customer support. So zoro.im basically has 3 things: bot-assisted customer business messaging, unified communication, and wallet. Next slide. So these are the main 3 use cases that we have. The first is, with the business messaging, we want to solve the problem of customer support and consumers trying to stay in touch with their favorite brands. Wallet is something we have included to transfer money over the chat. That could also help business to do commerce with consumers, e-commerce. And unified communication is something app to app, audio, video calling, and also international calling. So these are the 3 main use cases we are trying to have or we have already in zoro.im. Next slide. It's very well known that millennials are going to text more. Messaging apps are bigger. Teens prefer to text. And over here, we are WhatsApp is for social, Facebook is for social, Instagram is for pictures. We want to specialize in bridging consumers and business. So that's what we want to. So basically, 65% of the consumers, the survey tells that they want to text with business or brands, and these are equally spread across small and large corporations. Next slide. These are the industries that are heavily going to message in near future. Healthcare, retail, restaurant, travel, professional service, transportation. We also assume banking as well. Next slide. And these are the 3 main reasons why they want to text with business: to get the regular updates, to stay in touch, to get customer support, and to schedule or confirm an appointment. And they want to also buy, they're also comfortable buying over chat. So basically the first use case that we have is called V channel. We have got channels in our app where anybody, next slide please, where anybody can create a channel from within the app. It comes to us, we approve it. All the followers based on the countries, depending on the country, they can see the channels. Right now we have about 7 to 8 channels created. And once they follow it, they can actually have a two-way chat, a real-time two-way chat with that business. Business can actually, which could be in any of these categories, can send targeted broadcasts, can send polls, surveys, contests, events, coupons, can even sell their products over the channel. Because only the interested guys are following, the conversion ratio is much higher. So this is an example of B2C channels. We also want to have B2B channels where a lot of banks and all, they want to, they have a lot of vendors, merchants that they regularly want to stay in, you know, they want to push them necessary updates on the business plans or promotions or etc. So there would be B2B, which would be closed loop channels, and B2C, which would be open to all kind of channel. So which, I mean, this is something we already live, which is currently already launched last month. Next slide. So what we are saying is, you know, it has little bit of, so it's for consumer, it's like one gateway with which they can connect to any businesses that are listed. It could be for customer support or to get regular updates from them. You know what? In India, it could be somebody like Patanjali, or it could be someone like Shopper Stop, or you know, anything that they want to get regular updates from, and which they find it hard to get on the Facebook page or Twitter page or on their website. It's like a WhatsApp style update that they will get quite easily in their mobile with the brands that they are following. And the companies that also, yeah.
Jimmy, let me ask you some questions to see if I understood this correctly. You are saying that you have a consumer app which any consumer can download and load up whichever brand they're going to want to communicate with through this app, and you're saying that there will be a whole bunch of brands who are also going to be participating on the business side who will be using your consumer app to communicate with their customers. Is that the correct configuration?
The first part is correct. The second part is actually anybody who wants to create a channel, they will still use their consumer app for one agent. So single agent is free. Once they get more followers and they want a more sophisticated, you know, they want to have multi-agents to reply to the chat, that's when the commercials will come in place, and that's when we'll give them a sophisticated, you know, like a web module where they can actually, multiple agents can reply to the consumers.
So I'll tell you where I'm concerned about this. I don't want you to go to market with this to consumers, trying to sell this to consumers. You're going to have to sell to businesses and
right,
kind
so
of roll it out
right,
through businesses.
Right. So we are actually approaching hotels, we are approaching clubs, we have also approached Vibrant Gujarat, that's next week, to tell and to promote. I'll just talk a little bit about, before I talk about Robin. So we are going to businesses and we are telling them to put up a banner on their premises so that they can convey to their consumers to follow them on zoro.im. So that's what we are.
But are they set up to be able to dialogue? Are you assuming that it's all the conversation is happening through a bot, or are you assuming that they will have people who are going to be chatting?
No, bot is something. It's a to-be feature yet. I mean, right now it's a two-way chat between business and consumers, and both the guys are anonymous to each other. Like for me, it will be like I'm talking to.
So the business needs to have people on staff who can take this workflow, right?
That's right. So that's true. So a small business, they can either with one agent they can reply back, and if they have more followers, they can have more agents, and that's when we want a bot to come in play, where a lot of standard queries can be answered. You know, it will be like a bot that we can deploy over multiple businesses, whoever wants to use that feature. So our bot will be mature by handling more conversations. These are some of the places where, I mean, these are some of the use cases where we have actually
So, Sumee, I am not at all comfortable with going to market with these small businesses putting up banners and stuff like that. You need to, my sense is I would want this to go into some, more solid use cases in solid categories of companies like customers, like banks may be a very good one, where there is actually a customer service center staffed with people who can respond. Like restaurants do not have this setup, right? Restaurants do not have the facility.
Restaurants, I agree. So for restaurants, it's more like, we are targeting bigger brands here, right? Absolutely. It's just that restaurants and clubs and hotels, it's for consumers to get regular updates from them. They're not staff. I agree. So we've started our talks with banks, and banks would also be interested in B2B channels, which would be closed group channels for a lot of. Banks typically have so many merchants and so many vendors.
Yeah, small business, semi-businesses of banks. Yeah, sure.
Right, and the same applies.
So now, what is the competition for what you're doing? Who else is in the market? This is.
There's a little bit of here and there in the market, but it's not to the level that we have right now, which is, it's quite easy it's very WhatsApp style. In the same window, a consumer will get broadcast. In the same window, he'll do one-on-one chat. So he won't know a bit of difference. So, there's a little bit of here and there again available, but it's not to the extent that it's not as simple as what we have right now.
So your next step is to get a few anchor customers, anchor enterprise customers who can start validating what you have.
That's absolutely right. So, and on the previous slide, we also have wallet built in where we want the consumers, let's say a company like Book My Show can send tickets or broadcast, let's say just to Mumbai or one of the city. And if somebody is interested, with one click, they can buy the ticket. So that's where the wallet comes in picture as well. And unified communication, that's our strongest point in the last 3 years. And so that modules are already built in. Already, like we are handling about, so far we have handled 10,000 plus calls through our platform. We have
and these are projects that you've done as custom projects for other customers, yes?
So these are the modules which we have given. The unified communication actually is like is already we have given on white label basis to other service companies and to other customers. So that module is already built in. So it's very that's very stable and solid. People can also make international calls from that. So the three use cases are unified communication, wallet, and business messaging. So basically, it covers. Tomorrow when we want to have a full-fledged customer support to be given to bank with multiple agents, that's when we will charge per agent per month. And the unified communication will, so consumer can have not only chat but can also have a video with the customer support.
So where are you with getting these anchor enterprise customers? How far are you from that?
We have about, we have just launched, so we have just started approaching the anchors to tell you. We're going to.
I would suggest that you do not waste your time approaching clubs, hotels, and all this. I would focus all your energy on recruiting some major enterprise customers through whom you go to market. This business will either work or not work based on how many enterprise customers you can get.
That's a good thought. So basically, you suggest us to go to a bank or airline company or something like that?
Yeah, I would suggest you go to, basically your business is a B2B business, but you're looking for businesses whose business is B2C or B2 a lot of small businesses. That's the kind of customers who need to communicate with lots of customers and get a bunch of large brands like that and start dialoguing with them to scope out their solutions and see if they're willing to pay, what are they willing to pay, and most importantly, what are they looking for in the product, because you may get pushback on this. They may want to do it all as white labels and not as these consumer apps. Like you're assuming that every brand will want to build a channel in a consumer app. I'm not convinced about that at all.
Over here, the USP is that it's an ecosystem where all the consumers can connect to all the business they want. So, initial anchors may resist, but once we have a subscriber base of 50,000 to 100,000, I mean, that's when we will, business would not hesitate to have a channel with us. So that's what we are gauging.
That really depends on who are in that 50,000 to 100,000, and the 50,000, 100,000 in the case of consumers, if it's not deeply segmented, is not a very big number. It's not a statistically significant number, and it really depends on what consumers the brands are trying to find. So there is a lot of refining of your strategy, positioning, go-to-market that needs to happen, Jimmy. I like what you're doing. I think there are elements of something quite substantial in here. There's a lot of strategic work that still needs to be done on your positioning and go-to-market strategy.
I mean, we are also having, right now we are also talking to some of the partners who wants to launch our own app, not white label or anything, who will partner with us to launch in Europe and Africa. And, they would be on revenue sharing, of course, basis. So that is also, I mean, we are also trying to build partners who can launch in some of the regions. And personally, the help that I need from you is I'm visiting US in February. I'm participating in Florida, one of the exhibitions called IT Expo. From there, I plan to come to San Francisco. And if you have some of the anchors that, I can talk to or refine the strategy, I'll be glad to, take your inputs and implement it. And another strong point is the architecture. Our team is 100% in-house, and some of the big brands like WhatsApp and Facebook, they're trying to do this, but the benefit that we have is because we are quite agile, we are quite, to be honest, if somebody wants like 5 more features for us, it would hardly take 5 days, because it's completely in-house, and we are quite flexible, and we can change our directions quite fast based on the needs of our anchors. If they want a feature that, that would appeal like 1 million customers, it won't take a lot of time for us to add. And so that's some of the positives that we have.
So Jimmy, my input is that this is a very promising, what you're doing is very promising. I'm pretty sure that if I were to work with you, I could help you build a very substantial company with what you have here. I will, if you hang on, I will explain how to use 1 million by 1 million, how we work with entrepreneurs, and you can decide if you want to join the program. If you join the program, we'll put all our efforts behind your project.
Sure.
Okay. So now, Maureen, are we doing any other entrepreneur pitch, or should we go into 1M and Q&A? Okay, move on, she says. Folks, if you like what we're doing here, our request to you is spread the word. Bring serious entrepreneurs who are doing serious things. And today you've encountered very serious entrepreneurs who are doing very serious businesses and have very serious aspirations and are willing to put in the time and work required to become successful. And that's the kind of entrepreneurs that we are interested in working with. We really believe that you can't build companies overnight. You have to put in the work and follow the rigor, put in the rigor to be able to build really serious, substantial, sustainable companies. That's the kind of entrepreneurs we would like to be in touch with. Everything resource-wise is at 1mby1m.com. You can start learning through the blog series, which is free and which is chock full of educational, informational, and inspirational material. You could also learn from the Entrepreneur Journeys book series, which is a case studies-based book series. There are 12 to 16 case studies per book, and there are 12 books. So you could look into the Entrepreneur Journeys book series and use that as your starting point for learning entrepreneurship methodology. These roundtables happen every week, every Thursday. For the foreseeable future, every Thursday we'll be here, and you're welcome to come and discuss your business with me. For extensive acceleration, which is what our premium program, 1M Premium program, is all about, we give you full methodology guidance. We have a curriculum that is a video lectures and case study-based curriculum. We help you with business development. We do make introductions to potential customers, channel partners, media, analysts, etc. We do help you with strategy consulting for every business, figuring out what is going to be your strategy on multiple vectors, whether it's go-to-market strategy, positioning, sales strategy, marketing strategy, customer acquisition strategy. In every aspect of that, there are strategy elements. And the success and failure are dependent upon whether you make the right strategic choices or not. And that's where we have a tremendous amount of experience, and we can help you, really get to precise strategic points where you will be able to rapidly make progress. And if you are fundable, we do help you with financing. We have a very large and comprehensive network of investors that we work with. And we have the ability to get your word out in the media. So whether you're trying to attract customers, partners, investors, having coverage in the media, whether it's in social media or having articles written about you, etc., these are really important ways to generate, social proof, generate awareness in your community, in the target audience, in the ecosystem that you're trying to be known in. And that's where we have a lot of clout, and we can really get the word out about your business, which will then bring in a lot of inbound interest for you. I recommend that you do the 1M1M self-assessment questionnaire to figure out a lot of the strategic points that you need answers to. These are the questions that investors would inevitably ask you, but you are the first investor in your business, so you should ask yourselves how you're doing on each of these vectors and what is your strategy, and see if you can answer those. If you have difficulty on the methodology front, 1M1M Basic is a curriculum-only offering, just $99 a month. You can go study the curriculum to plug some of the knowledge gaps that you have in terms of methodology. So dig around on the website. There is extensive information on what to expect from the premium program, the basic program. We have lots of video FAQs, which will answer your questions about the program. So on and so forth. The curriculum is case studies and video lectures based. You're essentially learning from over 750 successful entrepreneurs who have, come to the forum, described their journeys, some of them in video format, like you heard I'll talk about today, some of it in Entrepreneur Journeys, case studies, text format. But we have a tremendous amount of synthesis also of video lectures and articles and so forth, with which you can really zero in on the methodology of both the core methodology, whether it's bootstrapping, positioning, market sizing, customer validation, customer acquisition, team building, all these aspects of entrepreneurship that you have to learn. And also in the electives, we have domain-specific, whether it's e-commerce, whether it's cloud computing, big data, mobile and social, wherever you have, wherever you are working, whatever ecosystem you're working in, whatever industry segment you're working in, there are a lot of specific material as well. So, these are the learning materials, the different modes in which you can engage with 1M1M. Our methodology is lean, capital-efficient, bootstrap startups. We don't believe in raising, undue amounts of capital and then, have exactly what Al was describing, is you go through 7-8 years and then make no money yourselves and you basically implode. That is not our philosophy of business building. These are essentially some coverage of 1M1M Premium members. You can go to the press page and look at the coverage of 1M1M Premium members to get a flavor. Upcoming free roundtables every Thursday morning in January. There's a roundtable. Please go and register, and let's get going. So we're ready for Q&A. Please feel free to use the public chat sent to all participants, or you can also call in. Just let us know if you're calling in, so we can do at least 10-12 minutes of Q&A now. Feel free to also introduce yourselves in public chat. Tell us what you're working on, etc. Shashidhar Bhatt is saying he's the founder of greenworkforce.in. All right. Jimmy Padia, you're asking about the $1,000 per annum program. That's a full acceleration program, Jimmy. We offer everything from project-specific guidance, just like you got a flavor of discussing your project and providing you strategic input. There is extensive amount of that happens in the program. And there is a curriculum that you have access to learn methodology alongside. And that is something that you're learning from 750 different entrepreneurs who have, provided their strategies and guidance. So we will very often refer you to case studies which are relevant to your particular business, and accordingly you will navigate from there as well. Then we have introductions, all the introductions, whether it's customers, channel partners, investors, media analysts, all of that is part of the $1,000 per annum program. Your best bet would be to go to the what to expect from the premium program, 1M1M premium program. That page, Maureen, could you provide the link in the public chat so Jimmy can go to that page and study that? If you have questions, contact Irina Patterson. Irina's email is irina@1m-by-1m.com. But please first go spend some time on the website studying the offerings. And it is, a large extent a self-learning program, so, you do need to be comfortable in that self-learning mode and this online learning mode where you study curriculum, study case studies, and then come discuss with me at the private roundtables. We have private roundtables that are part of the premium program. Does that answer your question, Jimmy? Do you have any other questions? There you go. Maureen has put the what to expect from 1M1M premium page link. You can look at that. Michael Chang has a few questions actually for Jimmy, I think. Why wouldn't the business choose a wider distribution channel than your in-house app, like Facebook messaging, SMS, etc.? Do you see merit in starting small and talking to restaurants, clubs, etc., and refine your product first before approaching larger enterprise players? Jimmy, you're welcome to dialogue with Michael. My read on this business, Michael, is that if you try to do this business, what Jimmy is trying to do by catering to small businesses, the sales cycle is going to be long and complex, and the deal size, average deal size, is going to be too small. It will not support the long sales cycle. So you will have a long sales cycle because you're trying to do something new and complicated. Therefore, you need to go to a customer size that can sustain longer sales cycles, and the payoff is substantial as opposed to, spending very long time selling to SMBs and then getting little pitsy amounts of money as payment. And that's just not a sustainable model through which you can build successful companies. Does that answer your question, Michael? And Jimmy, this is a good question, and you need to pay a lot of attention to the answer that I just gave you. And by the way, there's a lot of material on this kind of stuff in the curriculum that I will be pointing you to learn from as well. Anybody else? Other comments, questions, issues that you want to discuss? Nikita Mittal, you're sending me private messages. You're a founder of DanceOfIt, India's #1 dance fitness brand. I would like to know how to make this scalable globally. Nikita, I suggest you come and pitch at one of the follow-on roundtables next week or the week after, and I'll be happy to work with you on your business. It's hard for me to respond without a lot more information. Sagar Desai asked a few questions from Al, which I don't think we got to. You heard an extensive discussion on the customer acquisition process. It's a full-fledged for Al's company, it's a SaaS company, and it's a full-fledged enterprise selling cycle. So it's selling with outbound, selling with, regular salespeople. So it's what we have in the 1M1M curriculum is a full methodology for that kind of selling. We call it the Sales 2.0 process, and that's what we use for our entrepreneurs in terms of learning how to sell to larger accounts. Jimmy, you will need to be a part of the 1M1M program for us to introduce you to anybody. We don't make any introductions unless you're part of the premium program. And we have extensive connections in the US, or everywhere actually. We are quite extensively connected in the business community in general. So. There's a very specific methodology of using our network. So you're going to need to follow that methodology, and that's how you tap into my network. Michael Chang, yes, look at your screen. Irina Patterson is your contact person. Her email is irina@1mby1m.com, and she'll be happy to get on the phone as well. You should please study the website first as well. There is a lot of information about the premium program, what to expect from the premium program. Maureen just put the link. If you scroll up in the public chat, the what to expect from the premium program link is up there. There's a lot of FAQs, video FAQs, so study all that. And of course, Irina will be happy to speak with you to help you, clarify whatever doubts you have. So Jimmy, you too, if you need to talk with Irina, please do. And Michael, Jimmy, if you guys need live conversations, Irina will be happy to get on the phone with you, or Skype or whatever. Any other questions, comments, issues, introductions? This is a very nice time to network. I know there are a lot of people in the room whom we haven't met before, and you haven't met one another. So this is a great time to introduce yourselves and, connect with both your peer group as well as with us. Anybody else? Questions, comments? Maureen is putting a question from Quora. I have a great billion-dollar idea. Why don't VCs invest in it? Well, the answer to that question is VCs don't invest in ideas. They invest in businesses. They would never, almost, unless you are an entrepreneur with huge amount of track record that the same VC has made money off before, it's extremely rare that VCs would invest in an idea before it is sufficiently validated. You have to be a proven serial entrepreneur with a successful track record, or you have to be a personal friend or family member for them to consider investing in an idea without any prior validation. For the rest of the entrepreneurs, I recommend the following steps before you pitch to any VC. Validate your idea without any financing. Try to get to paying customers before approaching seed investors. Bootstrap during that period. Get introduced to seed investors with a clean set of proof points. Pitch with a well-articulated slide deck that answers all the questions in the 1M1M self-assessment, which I just took you through. Our philosophy is go to investors like kings, not beggars. If you want detailed guidance, consider using the basic curriculum, the 1M1M basic curriculum that you can learn methodology from. And if you would like feedback on your idea from me, come and pitch at one of the upcoming roundtables any Thursday. By the way, there was another question that was for Al, which let me just pick up, scroll up and answer. Sagar Desai was asking, quick question for Al, when you were bootstrapping, how were you paying your bills? Did you have a full-time job, or did you have a runway built up from previous jobs? Sagar, if you recall, Al said he had a services company. He did e-commerce sites for, significant amounts of money, and that built up some of the cash flow. So that's a bootstrapping using services strategy. You can either bootstrapping with a paycheck, or you can bootstrap using services. Those are two tried and true mechanics of bootstrapping, and we have, by the way, both books on each of those topics as well as extensive material in the curriculum. Either way, you can learn techniques of those from books, the 1M books, Entrepreneur Journeys books, as well as from the curriculum here. Jimmy Padia says, Michael, SMSs can only be sent to existing directory, whereas with us, bigger market can be captured. SMS can only be text. Ours is rich text, images, videos, polls, events, transfer money. I can be reachable at, he's giving you his contact information. Michael says, this is Mike. Today is my first time here. I really enjoyed the talk, and the bootstrap talk resonated with me. I liked your clear answers on Quora. Thank you. And thank you to you as well, Michael. You're very welcome. Thank you for coming. Gaurav Agarwal says, I enjoyed this talk. Most likely I will talk with you in the next roundtables or our following one. Okay, great. Absolutely. I look forward to working with all of you. And so come back, go register on the website for the next roundtable. Come back and let's continue the conversation. For today, goodbye. Happy New Year. I hope 2017 is going to be fabulously productive for all of you. And we will continue working with you. Bye-bye.